Good afternoon, traders. This is Antoine Farrar back with another trading video with Digital Goatz Academy. Welcome to our weekly review segment. Now, let's just go back what happened this previous week in the market. So that would be June 15th all the way to June 20th. We're really missing a day because Thursday really wasn't a strong trading day, but at the same time, the market was still moving. So, if you're following Digital Goatz Academy, you obviously know our main premise on what we talk about is indices. And if you're tuning into this video and find value within our channel, make sure you hit that like button, comment, and subscribe on your way in or on your way out, guys. So let's just get into it. Like I said, what happened this previous week? One, we had jobless claims, but we also had Jerome Powell speaking on Wednesday. Then we had then we had a holiday, which was Juneteenth. So to be honest, the market wasn't that sporadic besides when Jerome Powell was talking. Now, what I have before me right here is the Dow Jones US 30, right? I don't have any of my markups up because I hit this button over here to hide them. Because what I want to start doing is that when we're looking at our weekly review and our market forecast, that we want to kind of eyeball the market naked and then look in correlation to our markups, right? So right here is where we're currently at, where the market closed at for Friday. Now we're obviously going to talk about what happened this week, but the consistency has been as the market closes on Friday, it'll normally pull back on Sunday or gap up to continue the market trend. That's what's been happening when it closes on a strong time frame. So like we see right here, this is the weekly time frame. So the move that it came from when you really look at it was consolidation. This is too early to identify this is like a selling position. I know what it looks like, but we did close bearish for the weekly candle last week. We pushed up, we pushed down, but we ended up closing up bearish. Now, just to kind of talk about what happened this week because of Juneteenth and because of Jerome Powell speaking, let's just kind of go back into pretty much back testing. Let me let me show S&P because S&P to me looked like the better I probably would have said the safest move compared to US 30, S&P and the Nasdaq, right? So let's scale in. And this is a new broker that I'm using on TradingView, not on like my actual broker that I trade with, which is KOT, but I'm using Vantage as another option to view the market on TradingView, right? That also clears out a lot of the noise that I already have from my annotations, that I had previously drawn up when, the market was going up and down. So that'll lessen the noise that we have or the confusion that you may have because obviously y'all aren't, using or drawing up my markup. So you might not visually be able to dissect what I'm trying to convey, right? So if you look at it weekly, well, daily time frame, same thing. So we scaled down. Let me see if it was bullish on the weekly. Yeah, so ended bullish, seen that before. We scale down to the daily time frame. We can see that this candle ended bullish. Okay, so that's strong, what we want to see. Scale down to the 4 hour. Let's ignore the 8 hour because that's a custom. Again, seeing that the market did in fact close bullish. It wasn't strong, but to me, that's still good enough. Let's see what it looks like on the hour. Still bullish, right? So I'm thinking that because this market closed this way, the continuation will probably gap the market back up to, I don't know where it's going to gap up to, but to finish out where the market was already moving, if the market could still be open on Saturday, if that makes sense. So what I'm thinking is that we're going to have a continuous push up. As you can see, last week we did gap up. Now that gap on all indices across the board came after the market reset from Juneteenth, not from Jerome Powell's speech. Now, this is where we were at last week. Well, let's look at Sunday. Let's just kind of back test and go from where we're at Sunday. So Sunday, the market pushed up. I think it gapped slightly. Did it? Let me see. Let me make sure. Tuesday, blah, 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 Monday. What we said, June 15th? Yeah. So the market did push up and it was aggressive. And the one thing I did mention is that I was kind of wary of how this candle presented itself. I mentioned that before. You can see I have it annotated on my other chart because that's the one that I was using to kind of figure out what the market is trying to do. Let me, so you see how I have this circle, this black circle right here, and you see, and it's hollow, well, or it's white. It's hollow or transparent or white, whatever you want to say to it, or clear. I had the same thing over here when the market pushed down. What was this, Thursday? So my thought process was that because again, we know that the market repeats itself, just not the same way, but almost visually alike, right? So when we identified this candle, my expectations was that the market was going to come back and collect this or blow past it, right? So it did collect it. And then we had the following Sunday. This was a Thursday candle. So this was the previous Thursday of this Sunday candle. So last week's Sunday candle, this candle was the previous candle to Sunday, if that makes sense. Hopefully I didn't confuse anybody. So we pushed up. This is how we opened up Sunday, and the market played around here. But the one thing that I did say is that I believe that our correction is gonna like bring us possibly back to where we had a buy stop from, which was 59.20. It never came to 59.20 exactly. So you can see the similarities of how the market look where it pushed up, then it came down what? At least 100%, right? At least 100% of this market. Now, when this market opened up, once we got to Wednesday, that's when we had small volatility. It wasn't even really strong. It just kept going up and down until it decided to, you know what? I'm going to respect where are we at? Oh yeah, pushed up. And then when Jerome Powell started talking, really we saw this stuff before he started talking. So the sell had already happened before he started speaking, right? So Monday of this Sunday candle is when the sell started happening. Below this previous support, I mean this previous previous support, look what the market did. Touch that previous, that's the area that it pretty much created resistance. Now, if you go back to my other chart, you can see where the resistance is at. Where was the resistance building up at? It was actually building up where we were looking to buy off of initially, but that made sense that the market was going to come down. We gave ourselves options. So the market pushed down, and then what did it do after pretty much the following day? So after the market it pushed down 2 days for after Jerome Powell spoke, and then into the following trading day, New York session, the market continued to sell off. I was actually surprised that it did continue to sell off. My expectations was that it was going to close, but it didn't. It closed at like 1 o'clock, which I mean, it closed at 12 p.m. Eastern time, which we were already down here. And then by the time the market reset happened, it gapped up. You know what I'm saying? So this gap right here that each one of the indices presented, I think this is one of the gaps where the market might not come back to this position, right? So we already know that I annotate my gaps how? With purple. Well, if it's a big gap, I leave it black and I just notate that it's I just put a text that it's a gap. So let's see. So I'll know that's going to be a gap just because how I trade. So if price was to retest any of these areas, hold up. Did I? Oh yeah, I'm sharing my screen. I was about to say this whole time, man. I've done that before. Yeah, I think that'll be better. I've done that before, do a whole session and don't even realize that I'm not recording, but still good information, right? So this is the gap that the market made that last 5 o'clock. Now, what has happened in the past is when the market has created that gap around the 5 o'clock, unless it tests, which I think this was the retest last week, it shouldn't come back to the zone. So we can see it on US 30 as well, displayed on the hour time frame. Now that's based off of that's me looking at the market with a sentimental analysis. I'm basing it off of previous data that I've seen that happened in the past where the market gapped at 5 o'clock. It never came back to that position. Maybe one time to test like the high of it. But other than that, it didn't come back to that position. Where is that actually? Let me see where it did that at, if we can find that. Just so y'all don't think that I'm blowing smoke up my ass. This wasn't it. Was it? Hmm. Was this a 5 o'clock? This might have been the move right here. You know what? This might have been the move right here where tested into it. I think this was the area that I was looking at, but it did in fact come back and test into it. Let me see. Oh yeah, this was that area. So it did it did come back and test into it. Yeah, so it did come back and test to it after it broke out. So something similar could happen. We can have a continuation, and then the market pushes back down here to establish some type of support. So again, funny looking candle right here. Well, this is really where the gap is at. So the gap on the 4 hour is basically where a previous level of resistance is at. But if we are gonna, if the fact that again, funny looking candle, the market may continue to push up, but then may want to come back and dive below this candle, to be honest, yo. Same thing we had happen these previous weeks. Now, because we're thinking that the market could acknowledge that, investors are seeing that or traders are seeing that, right? Or seeing that this exists and it may not even come back to the zone. So we just have to pay attention to how the market is reacting. But again, anytime like this is imbalanced candles, so if the market came back up here and then sold off from there, so in order to collect all this liquidity down here, that makes perfect sense. We'll just have to see. If we get a big push to the upside, then yeah, it's not coming back down. But that's also why it's like I'm not looking for the sell because I don't want to train my mind into say that, yo, we're selling. And it may set just like we saw last week. It did sell. That was a good move. But all that chaos that happened in between, to me, the buy is much clearer. You know what I'm saying? So if we do have any push, any type of push, it should happen like the beginning of this week, and then the market pushes back up. But we'll just have to see, once Sunday candle opens up. But if it opens up like with another gap, I don't think that we're coming back. Now, I think we might fill that gap, but this gap we might not fill. You know what I'm saying? And if we do fill this gap, it'll only be like at the top of the candle or something like that. But you can see that for the most part, the market has at least filled these gaps. Um, I mean, just think of the structure. So regardless of the market breaking out of here, once we get more data, we'll be able to establish that this is a previous high, so it may want to come back to this zone. Or if you just turn it to a line chart, well, actually, let's do Hakanashi's because it rids all that confusion right there. Because it doesn't show you the gap, which I like. Now it's showing you the momentum, but we have to break out of this consolidation area. What I'm trying to do is find where it might show a doji, where that gap is at, to see if there's like a previous high within the market. So, okay, that's the momentum from the gap. So if anything, because we've broken it down all the way down to the 15-minute, what have we already said that the market loves to be attracted to? Consolidation. So on a 15-minute time frame, this is consolidation that hasn't had a pullback. So we may push all the way up and then decide to bring the market all the way back down, either 100% or a little bit lower than where this consolidation is at, which makes sense because we're still playing to what? we're still playing to that previous gap in the market, not to mention this previous high. So even if it doesn't want to come all the way back up, all the way back down to this market, remember the market is attracted to previous highs. When it does these shallow pullbacks, these are traps. If the market decides to push back down here, because we haven't yet broken out of this consolidation area. So I can see the market trying to do what? Push all the way back down. I was on the right section. Push all the way back down to like this previous high, if not the previous high that's over here, and that would make sense. So there's a previous high right here around like 41,630, and then there's a previous high probably in balance definitely because there's a gap right there. But if we just broke it down, I don't think we could break it down any further. So see if you remember what I just drew. The market could come back down all the way down here, and that would make perfect sense if it did do that. But to me, this also would establish and confirm our support. So if we were to push all the way back down here, which I don't think that we are, but again, hell, I wouldn't say I've been super wrong, but the expectations of where the market, well, for US 30, because it's just a little bit of a ball game, but hell, S&P, we've been on fucking point. So I'm not even going to say like I've been overshooting or wrong. We would love to have the perfect entries. We don't. We just don't know when the market is going to respond to when we're waiting for these entries and stuff too, right? So I can see the market pushing down a little bit lower, which would attack either the top of this gap or the high of this gap. I mean this or back into this blue zone, but we'll cross that bridge when we get there. By the time that happens, the market will probably try to reach a high up here before it decides to do that, if it does decide to do that. But I'm thinking this is our move. Like if you just break it down to a line chart, I'm thinking this is our momentum and this is where the market is going to carry us. So you can see like it could still establish now that we have it as a line chart. Unless it continues, we can still establish some form of a swing low right here. Like the market could push down a little bit more and then push up high. But we'll see. The momentum to me, let me look. Yeah, the momentum is still carrying on the 8-hour time frame. And as we can see on these 8-hour time frames, the momentum is at least strong until like it pushes up to like another level of resistance. So each time the market did come down, it did push up or a little bit around resistance. So this was resistance up here, even though the market did shoot up all the way up here, it found itself resistance and then pushed all the way back down. So if once we get back up here, we'll just have to analyze and see if we're pushing back down to these lower levels. If not, break out to the moon. But like we've already established that this consolidation move, it's bullish overall. The only thing is that it hasn't broke out of this area. So you'll find opportunities to buy and sell within US 30. I'm not looking for sales, but there are opportunities to buy and sell as long as this thing keeps consolidating or ranging until it breaks out. But man, when I'm telling you, when it breaks out, you're gonna wish you were already in it. You know what I'm saying? Like that's my expectations. Like you're gonna wish that you was already in it and stuff because I do think that these are gonna be one of these buy options that if your capital is straight, you might be able to hold this for a year. I wouldn't recommend that. I would break it up, but again, there's longer money than what I have to my disposal. So I can't obviously voice what other people do with their money, but I do look at it as an opportunity, especially like when you look at taking advantage of how trading is, like with the minis, like with the US 30 minis, the NASDAQ minis and stuff, using that to your full advantage. If you have lower capital and stuff, you just got to know how to actively trade it. You know what I'm saying? Like what the cost is, all the minute stuff that we know as traders, right? So that's my expectations for US 30. Obviously, if I'm expecting that for US 30, I'm expecting the same thing for S&P. I don't look at the NASDAQ like that, but because the NASDAQ, you can, like I said, I think I said this on my last video, you can be in S&P and US 30, and at least it's not 930. You could be in profit for both of them going the same way. The NASDAQ isn't like that. It's too volatile. It could be selling while both of those are buying up or vice versa, or start selling off and then buying up. So I like looking at S&P and US 30 because their correlation is very similar and stuff. It's just that the payout obviously is different and the aggression on how they move is a little bit different, right? There's other things influencing them. So of course they're going to react differently based off of market cycles, but overall they're, very similar across the board. So we still have this consolidation right here. And the one thing, like I said, I probably emphasize that a lot about, hold on, talking too much and not catching my breath, right? I emphasize that a lot that indices do this. They play that game that they're gonna sell, and you be like, oh man, you train your mind to start looking for sales because of what it did last week, and then you're confused why it's buying up on your ass. You know what I'm saying? And it does this. This is consolidation, man. Still, even right now, I'm still looking at it consolidation, even with these gaps. The most thing that I could see that happen is the market try to test back into the gap or the top of the gap. Was it this gap? Oh, S&P. So yeah, it was on S&P that I was showing that. It wasn't US 30. So I'm glad that I did come back to this because it was S&P where this was the kind of same move that US 30 made when I showed you that lower gap. You see the market did not come back to this 5 o'clock candle. Now, obviously US 30 is a little bit different. So US 30 is probably not playing that game. But what did it do? It came back to this candle. That's all it did, yo. So the only thing I can see is that if it gaps up, well, one, if it gaps up, it's coming back to where the gap that the market made around this price zone of like 6,000 and stuff. So that'll probably be a guarantee. But I don't think that it'll come back to this lower gap. I think if anything, it's going to want to test where this high is being presented or somewhere into this candle and try to get low. But as you can see, very similar. Like this is a gap right here on top of running into a previous gap from like, what was this? What year is this? Hmm. I think this is 2024. Oh yeah, the previous gap from last October. What was this? No, last September. Yeah, last September. So this gap, that's kind of crazy. And we're above last year's um last year's gap. So that's a good thing that I like to see that we're probably not coming back to that because we were remaining above it. But we do have a gap down here. I don't think that we're coming back to these lower levels. You know what I'm saying? If the market is trying to form resistance in order to push down, the most I can see us coming back, it's to this imbalance down here. But we'll cross that bridge when we get there. I just don't think so. I think that this consolidation is just upward. And again, any move down is just a move to buy back up. Sweet people, what the market does. Like we already noticed, everybody has noticed how the market will get extremely bearish if we're buying up. And then as soon as it takes you out of your position or you close a position, all of a sudden it starts getting aggressively bullish. You know what I'm saying? Or, you close the trading day and the market got bullish. You know what I mean? Like we know that it's basically just took people's money at that point. You know what I'm saying? When it flips the other side like so violently, like yeah, it just took people out and that gained the equity it needed to boost it in the opposite direction. You see what I'm saying? But that's all I have for this weekly review trader. So we didn't go over jobless claims because like the market pretty much just made its move and continued off of Sunday's candle. Uh Obviously we talked about Jerome Powell and what happened. Like he didn't really change his narrative on what they were saying, but the analysts did predict that if he was hawkish, which he sounded more positive than negative, but really across the board, you just say neutral. But since he sounded more positive than negative, their premise was right that a hawkish move, which is positive, it triggered the market to sell off and stuff in order to correct itself. So analysts did predict that, you know what I'm saying? And to be honest, we had the positions. We had the positions with six, if we would have just said, yo, I'm selling, back to the low at 60, 17. That would have been damn near a sniper entry or whatnot. The only thing is that you would have had to be out of the market by the time it closed. by the time it closed for Juneteenth on Thursday. But, trading is trading, as we know. So obviously, let's prepare ourselves for a better week. I think the market is showing the data that we want to see. I mean, it's been showing us what we want to see. We just got to execute properly. Wait for that candle, see how the market is assessed. See how the market is basically forming and collect the data and then just make obviously the I wouldn't say an educated guess, but just make accurate entries, you know what I'm saying? And be okay to wait to see what the market is doing if you are confused, you know what I'm saying? I still struggle with that sometimes, but I'm better than I was a couple years ago, that's for sure, you know what I'm saying? But that's all I got, traders. I will catch everybody on our next video with Digital Goatz Academy, and that will be our market forecast. So I hope everyone has a successful trading week this week. This year, like I said, I still stand by it that I think it's a great year for traders and investors. So I'll catch you on the next video. This is Antoine Farrar signing out.